President Trump a short time ago telling Walmart that the company should, I'm quoting now, eat the cost.
Walmart plans to cut about 1,500 jobs in a restructuring aimed at trimming its expenses and speed up decision making. The Wall Street Journal reports that the company told employees it will reshape some of its teams, particularly in global technology.
Walmart says their first quarter profits slipped and they have to raise their prices as a result of the tariffs, threatening their low price model.
It began with a shockwave through America's largest retailer. President Trump, reportedly furious, unleashed a storm of tariffs, and Walmart fired back. In a stunning move, the retail giant yanked part of its supply chain out of the U.S., blaming rising tariffs for making their everyday low prices impossible to maintain. Trump demanded they eat the cost, but Walmart refused. Instead, they hiked prices across the board, sending shockwaves through households already struggling with inflation. Minutes later, another bombshell. Walmart warned of further price hikes and urged shoppers not to panic buy yet. Before we begin, make sure to hit the like button. It helps us beat the YouTube algorithm. But panic, it seemed, was inevitable. Behind the bright lights of America's biggest stores, a dark reality was taking shape. Walmart and Target, once the anchors of retail stability, now faced losing access to critical goods in the unfolding tariff battle. Picture this. You walk into Walmart for your usual 500-gram beef tray, and overnight, it spikes from $9 to nearly $14. A bag of lettuce? Up 30%. Your morning cereal? $2 more. The American grocery aisle was no longer safe, and beyond American shores, the ripple effect was devastating. While Trump blasted Walmart for betraying American workers, food shortages began to haunt nations far away. Disrupted supply chains, congested ports, and canceled shipments meant rice, cooking oil, and canned meat weren't reaching Asia and Africa. Supermarkets in Southeast Asia reported U.S. imports vanishing. Markets from Nairobi to Manila hiked prices overnight, leaving families desperate. Trump's tariffs sparked a U.S. political battle. Before we continue, make sure to hit the subscribe button. It really helps the channel grow. Walmart's everyday low price mantra, gone without warning, silently scrapped to stem what could be a staggering $25 billion loss in the second quarter of 2025. But higher grocery bills were only the beginning. By June's end, Walmart announced it would temporarily shut down 10 major distribution centers. Over 50,000 workers faced layoffs. The just-in-time logistics empire, designed to keep America's shelves stocked, was now teetering on collapse. And the blame? Retailers pointed directly at Trump's relentless tariffs, calling them financial grenades exploding across the supply chain. On Wall Street, the panic was contagious. Walmart's price hikes and distribution center closures triggered fears of chaos spreading beyond retail. Electronics giants, apparel chains, and toy makers, industries relying on Walmart's buying power to stabilize costs, now face the same tariff-driven price hikes. Without Walmart's bulk shipping volume, freight rates spun wildly out of control. Shipping brokers warned contracts once stable for months were now being rewritten weekly. The global trade system was entering uncharted waters. Unless the White House stepped in fast, analysts warned, America could face the largest retail collapse in modern history, and just before the holiday shopping rush. In this report, we break down how Walmart's crisis is shaking every corner of the retail world. Stay vigilant. The cash in your wallet could lose value overnight. Because it all began on April 2, 2025, when the White House Rose Garden transformed into a battlefield of economic warfare. That morning, Trump signed Executive Order 14,257, the Liberation Day tariffs. And Walmart's retreat from America wasn't an isolated incident. Other major retailers began fleeing as well. Quietly, Target, Costco, and Home Depot started cutting deals in Vietnam and India, shifting supply lines out of China. This mass exodus marked the largest global supply chain shift since the 1990s. And the irony? Tariffs meant to punish China were accelerating China's replacement. Yet the cost was falling squarely on American consumers. By midnight April 5th, nearly every import entering the U.S. faced a 10% base tariff, sparing only Canada and Mexico. Then came the second blow. Just 4 days later, the White House unleashed retaliatory tariffs against 60 trade partners. China bore the brunt, a staggering 145% tariff on most exports. Almost instantly, Walmart's Chinese toy supplier, Hunar Toy Factory, saw orders canceled and production slashed by 70%. By April's end, the American Toy Association issued a dire warning. Nearly half its members faced bankruptcy. Meanwhile, shipping rates on the Shenzhen-Long Beach route tripled. And Europe? It didn't escape the storm. Behind the scenes, shortages were brewing before anyone stepped into a store. At the ports of Los Angeles, Long Beach, and Savannah, Hundreds of containers sat stranded. Importers, facing new tariffs they couldn't afford, began abandoning shipments. Customs brokers reported something chilling. Some companies simply walked away from their cargo, leaving it to rot on the docks. The empty spaces once filled with Walmart-bound goods now overflowed with unclaimed freight. And if this gridlock persisted, holiday shipments could miss shelves entirely, leaving America's most critical sales season empty-handed. Then came May 2nd. Trump raised the stakes again, threatening a 50% tariff on all European imports unless the EU surrendered to his demands. A tense phone call with European Commission President Ursula von der Leyen bought a temporary extension, pushing the deadline to July 9th, but the damage had already begun. EU stock markets bled $180 billion in just 3 days. Germany's car exports froze, and the Euro Stoxx 600 plunged 4.4%. South Korea scrambled to contain its own fallout, reeling from a sudden 25% tariff on imported cars that threatened nearly half of Hyundai and Kia's US-bound shipments. The human toll was fast and brutal. South Korea's central bank warned of a 4% drop in auto exports to the US for Q3, risking tens of thousands of jobs in manufacturing hubs like Gwangju and Ulsan. Meanwhile, on the front lines of American retail, Walmart employees felt the sting first. With fewer trucks pulling into stores and pallets going unstocked, shifts were cut. Associates were forced onto split schedules, scrambling for hours to keep their paychecks afloat. Warehouse workers lost overtime just when the summer ramp-up should have begun. Everyday workers were caught in the middle of a trade war they couldn't escape. Labor unions raised the alarm. They argued the tariffs didn't just punish nations, they punished American families, and the chaos wasn't over. On May 28th, the U.S. Court of International Trade ruled that Trump had overstepped his EPA authority, pausing most of the tariffs. But instead of clarity, the ruling only added confusion. Businesses now faced a terrifying question. What happens when the courts lift the pause weeks from now? Would the tariffs return overnight? Would they rise even higher? Walmart, scrambling to adapt, was already reeling from losses that could top $25 billion for the second quarter alone. And while Walmart searched for answers, its global supply chain began to crack. Factories in Vietnam and India, eager to take on Walmart's orders, warned they couldn't replace China's industrial power overnight. Textile mills in Hanoi reported backlogs stretching 6 months. Indian electronics plants struggled with shortages of components still sourced from China. The pivot away from Chinese suppliers was slower than anyone hoped, and the price hikes hitting American grocery aisles showed no signs of stopping. For Walmart's global sourcing team, time was running out, and the price of time, unforgiving. Since Trump's 145% tariff took effect, sea freight rates on the Asia-US route exploded. What once cost $3,500 per 40-foot container surged to $6,500 in just 3 weeks. Shipping carriers warned it could climb to $8,500 before summer's end. Blank sailings, empty ships skipping ports to dodge tariffs, jumped by 20%, causing shipping delays of up to 2 weeks. The just-in-time delivery system that Walmart spent decades perfecting was now collapsing under the pressure. Even Walmart admitted that some days, store shelves simply sat empty. Small and mid-sized importers, too, were caught in the crossfire. As banks grew jittery over unstable trade policies, many cut off financing for companies dependent on Chinese goods. Venture capital firms pulled back from investing in logistics startups, citing volatile freight rates and geopolitical uncertainty. Without new capital, supply chain innovation stalled. Credit rating agencies downgraded their outlooks for retail, logistics, and manufacturing, warning that the tariff crisis was now dragging down the entire economy. On land, a storage panic set in. Companies scrambled to hoard inventory before the next tariff wave hit, sending warehouse rents soaring. Bonded warehouse fees quadrupled overnight. Even Startup Flex, which rents out excess warehouse space, was overwhelmed, reporting a 6-fold jump in inquiries and creating a waitlist for the first time in its history. And as Walmart shuttered 10 of its distribution centers to cut costs, it burned millions daily storing containers that had nowhere else to go. A logistics network built for speed was now bogged down by stillness and uncertainty. Agricultural exporters faced their own nightmare. Walmart's global network once carried U.S. beef and produce across Asia. Now, those products sat in cold storage, their sell-by dates ticking down. Beef exports to Asia, a Walmart staple, piled up unsold. Some meat spoiled before it ever left the port. Farmers, still struggling to recover from the last trade war during Trump's first term, now saw their hard-fought gains erased. It was history repeating itself, only this time, the blow cut deeper and hit just as farmers were clawing back from the pandemic's devastation. But perhaps the most jarring blow was yet to hit American consumers. Economists warned that these tariffs alone would add roughly $1,000 a year to the average household's expenses. In May, Walmart's CFO, John David Rainey, painted a grim picture on CNBC. Beef soaring from $12 to $14 per pound, Guangdong patio sets tacking on $60, and a child's $350 car seat from Suzhou suddenly costing $450. Walmart's sacred promise of everyday low prices? Now under siege like never before. Even Walmart's digital future couldn't escape. Their marketplace for third-party sellers, designed to compete head-to-head with Amazon, became a battleground of its own. Small businesses importing home goods, toys, and apparel found themselves crushed under new tariff costs. Some raised prices. Others pulled their products entirely. The dream of a low-cost, fast-shipping alternative to Amazon fading fast. Walmart's digital expansion, once its ticket to future growth, now stumbled under the weight of this tariff-driven chaos. Across the ocean and across the street, the collapse of the just-in-time system was undeniable. Cargo ships sat anchored offshore, unable to unload. Retail aisles in suburban Walmarts stretched eerily empty, and while the White House insisted these tariffs would eventually lower prices and bring back American manufacturing, families were already paying more for basics like cereal and milk. Tens of thousands of warehouse workers idled. The costs of delay, confusion, and policy whiplash fell hardest on the working class. Then, behind closed doors, Walmart sounded the alarm. On May 28th, a leaked internal memo titled Project Triage shook Wall Street. It confirmed what many feared. Walmart would suspend operations at 10 major distribution hubs over the next 6 weeks. From California to Florida, these shutdowns would ripple through local economies. Restaurants, gas stations, and truck stops near these centers braced for the fallout. School districts feared a drop in tax revenues. Trucking companies canceled new equipment orders. Communities that once voted for Trump now found themselves caught in an economic tailspin of his own making. The names on the shutdown list read like a map of American commerce. Riverside and Fontana in California, Brooksville and Winter Haven in Florida, Pageland in South Carolina, Sanger in Texas, Elwood in Illinois, Groveport in Ohio, Plainfield in Indiana, Menominee in Wisconsin. These were not just dots on a map. They were the beating heart of Walmart's retail empire. Each hub covered more than 800,000 square feet, running 24/7 to feed Walmart's 151 million square foot logistics network. And now 50,000 workers, most in temporary or agency jobs, were told their paychecks would stop by June 30th. On Capitol Hill, lawmakers from both parties demanded answers. The House Commerce Committee prepared hearings to investigate why Walmart was downsizing, while the White House insisted the tariffs weren't hurting Main Street. But in southeastern Walmart stores, panic was already setting in. Managers were warned to stock every freezer to the brim, anticipating week-long delays in fresh food deliveries. Industry analysts whispered what few dared say aloud. Walmart's once unstoppable just-in-time system was dangerously close to collapse. But as Walmart struggled, its rivals circled like vultures. Amazon ramped up grocery discounts at Whole Foods, betting frustrated shoppers would defect. Discount chains like Aldi and Dollar General expanded their grocery aisles, hungry for Walmart's displaced customers. In the retail battleground of 2025, the prize was clear. Win the wallets of America's shrinking middle class, and you win the future. But to win, they had to keep prices low and shelves full. No small feat in a world where tariffs changed overnight. Meanwhile, on social media, the panic spread like wildfire. On TikTok, the hashtag empty aisles exploded, racking up 12 million views in a single day. Viral videos showed shelf after shelf wiped clean as users tagged Trump, demanding answers. Will bread and milk be next to vanish from our lives? The images were haunting. For many families, the tariff war wasn't some distant economic debate. It was right there, in their grocery cart, in their fridge, and on their kitchen tables. And while families worried about dinner, the economic fallout grew darker. Walmart became ground zero in a political and economic storm. 50,000 families now face temporary unemployment as shattered supply chains left entire towns hanging by a thread. The question on everyone's lips: were Trump's protectionist tariffs truly reviving American manufacturing or simply pushing warehouse workers to the brink of ruin? In Brooksville, Florida, the answer came with heartbreaking clarity. Everbright Sewing, once a proud Walmart supplier, closed its doors after 20,000 uniform orders were suddenly canceled. Its owner didn't mince words. One phone call from Walmart's procurement team sent us into bankruptcy. And Everbright's story wasn't unique. Reuters reported that back in March, Walmart pushed Chinese suppliers to slash prices by 10% for every round of tariffs. Cookware, apparel, toys, they all faced relentless price cuts. Factories already running on razor-thin margins couldn't keep up. The damage was staggering. In Guangdong, Hunar Toy Factory, Walmart's partner for 40 years, was forced to slash production by 70%. In just 3 weeks, 130 of its 400 workers were laid off, their livelihoods erased in the blink of an eye. But that was just the overseas fallout. Here at home, small businesses felt the sting too. The Small Business Association's confidence index plunged to 95.8 in April, below its 51-year average, as owners feared locking in contracts that could become unprofitable overnight. And the logistics nightmare was far from over. Container shipping rates from China to the West Coast skyrocketed from $3,500 to $6,500 per FEU, with analysts warning they could top $8,500 by mid-June. Shipping lines slashed sailings to dodge tariffs, leaving goods stranded at sea. On American highways, the chaos was equally intense. Trucking firms raced to deliver pre-tariff shipments, creating a brief boom that soon collapsed. By late May, DAT forecast flat truckload volumes for the year, and Knight-Swift's CEO warned of no recovery in sight for Q3. As Walmart's distribution centers shut down, local carriers lost steady delivery routes, forcing drivers into unpaid furloughs or empty backhauls. The dominoes were falling fast, and there was no safety net. And it didn't stop there. With cash running short, small suppliers began delaying payrolls, cutting insurance, and begging banks for loan extensions. Economists warned that this downward spiral could push small business defaults to their highest levels since the 2008 financial crisis. The once mighty retail ecosystem Walmart built over decades was unraveling. And what replaced it? Uncertainty, layoffs, and empty storefronts. The ripple effects spread into the most unexpected places. Agricultural exporters who once relied on Walmart's vast network to ship American beef and produce overseas now watched helplessly as their goods sat unsold. In cold storage warehouses from California to Singapore, tons of beef aged past their sell-by dates, forcing producers to dump product at a loss. The same farmers who battled trade wars during Trump's first presidency now saw history repeating itself, this time threatening to wipe out their post-pandemic recovery. And it wasn't just farmers and truckers. Logistics firms, storage providers, even small diners and gas stations near Walmart hubs began reporting vanishing revenues. As one Wall Street analyst put it bluntly, when a warehouse shuts its doors, every truck waiting outside turns to rust. The real danger wasn't limited to a few dollars extra for groceries. It was the slow collapse of the invisible network that kept American retail alive. Cardboard box factories, container yards, pallet makers, all teetering on the edge. If these critical links failed, entire industrial parks built around Walmart's supply chain could be abandoned, left to decay. And Walmart, faced with a staggering $25 billion hemorrhage, it launched a counterattack. Internally dubbed Project Reset, this plan aimed to overhaul the company's entire global supply chain in just 24 months. The first step, an aggressive retreat from China. Before the tariffs, nearly 60% of Walmart's non-essential goods came from Chinese factories. By Q1 of 2025, that number dropped to 48%, and Walmart was racing to lower it even further, inking deals with suppliers in Vietnam, India, and Cambodia. In Hanoi, Vietnam's Ministry of Industry and Trade revealed Walmart's plans to invest $1.2 billion to expand textile and home goods production. In exchange, Vietnam secured a lower 25% tariff on exports to the U.S. But this pivot wasn't smooth. In April, the White House threatened Vietnam with anti-dumping duties as high as 46%, only to delay them for 90 days. Walmart's new supply chain was already on shaky ground, its long-term contracts shredded by unpredictable politics. The company couldn't rely on Asia alone to save its bottom line. That led to Walmart's second move, the Made in Heartland Initiative, a $5 billion plan to build 3 new factories focused on home goods and electronics in Arkansas, Ohio, and South Carolina. Funded through a bond sale in April 2025, when interest rates briefly dipped, this project was only a down payment. Walmart pledged to invest $350 billion over the next decade, hoping to slash overseas shipping times from 28 days to under 1 week. But the question remained, could America's manufacturing sector really rise fast enough to replace China? Walmart's third gamble sounded like science fiction. Partnering with robotics firm Symbotic, it expanded an AI-powered automation system called Link 16, named after the U.S. military's battlefield data network. For $520 million, Walmart deployed Link 16 across 400 fulfillment centers. The system analyzed live freight rates, tariffs, and even weather patterns to predict supply chain disruptions and reroute shipments in real time. Executives claimed it would save $600 million a year. Someday, they hinted, Walmart could rent this technology to other retailers, transforming its supply chain from a cost center into a profit machine. But all of these grand strategies rested on a fragile political tightrope. If a new administration took office in 2029 and reversed Trump's tariffs, Walmart could be stuck with billions in U.S. factory investments it no longer needed. And yet, if it moved too slowly, more tariffs could crush its margins first. It was a race against time and against politics. Every tariff tweet from the White House forced Walmart to redraw its entire global supply chain in 72 hours. Even a $680 billion company struggled to keep up with that pace. And while Walmart spent billions repositioning its logistics, Wall Street asked the only question that mattered: would American shoppers benefit from more made-in-USA goods? Or just pay even more for the same toaster or patio set? The answer, for now, remained buried under the chaos of tariff schedules and shipping invoices. But the financial pain was already visible. Just 6 weeks after the Liberation Day tariffs began, Walmart's stock plunged 11%, wiping out nearly $37 billion in market value in only 30 trading days. The sell-off wasn't confined to Walmart alone. As its stock crumbled, index funds were forced to rebalance, dumping retail holdings and pushing Walmart's value even lower. The panic swept through the logistics sector. On March 21st, FedEx slashed its full-year outlook, warning of a brutal operating environment ahead. Its stock plummeted 11% in a single day, the steepest drop since the 2020 pandemic. And it wasn't alone. The Dow Jones Transportation Index, tracking giants like UPS and J.B. Hunt, tumbled 17% from its November highs as investors braced for a full-scale supply chain meltdown. Even Prologis, the titan of warehouse real estate and a longtime Walmart partner, couldn't escape. The announcement of Walmart's distribution center closures sent Prologis stock down 9.6% on April 3rd, its worst day since March 2020. Analysts warned that rising vacancy rates and plummeting rents would soon ripple through the logistics real estate market. As one Bloomberg intelligence analyst put it bluntly, this was the moment Wall Street realized logistics real estate can't outrun a trade war. And the fallout kept spreading. Within 48 hours of Walmart's stock crash, more than $6 billion fled from retail and transportation ETFs. It was the largest outflow since the 2008 financial crisis. Bond yields for BBB-rated companies soared by 55 basis points, forcing Walmart to temporarily pause its $5 billion bond sale for the Made in Heartland factories. Meanwhile, the VIX, the infamous fear gauge, spiked past 26, flashing red across financial markets. The message was clear. If the White House didn't de-escalate, this retail collapse was only the beginning. Overseas, the tremors shook global confidence. By the third week of Liberation Day tariffs, Brussels issued a dire warning. $380 billion, roughly 70% of EU exports to the US, were now at risk. Europe threatened $95 billion in retaliatory tariffs unless Washington backed down before the July 9th deadline. But the numbers told a darker truth. Brussels' new tariffs alone couldn't erase America's $226 billion trade deficit with Europe. Canada joined the chorus, as Prime Minister Mark Carney declared the tariffs a political debt that must be repaid. Mexico warned the stakes were even higher. A new 25% tariff could wipe out 400,000 American jobs, violating the USMCA trade pact. Global markets reacted instantly. Europe's business confidence index hit a 3-year low. Canadian bond yields crept higher, and investors stampeded into safe havens like gold and Swiss francs as US trade talks stalled. The world now faced a chilling question. Would President Trump reverse course to preserve America's trade alliances, or would he double down, dragging the U.S. and its partners into an economic Cold War? As the battle lines hardened, Walmart's $25 billion loss and 10 shuttered distribution centers became more than a corporate setback. They were a flashing red warning for the entire global economy. Back at home, American consumers felt the sting with every grocery trip. According to Reuters, Walmart raised prices across the board to offset Trump's tariffs. As a result, shoppers saw their receipts rise by 2 to 3% almost overnight. But that was just the opening salvo. If the White House stayed on its America First path, with 145% tariffs on China and dozens of other partners, the consequences would stretch far beyond retail. Manufacturing in America's heartland could stall. Hundreds of thousands of workers could face layoffs, and the global financial system could lurch dangerously close to another crisis. Remember to hit like and subscribe. Thank you so much for watching. Your support means a lot.